Hey everyone, welcome back to TechFeed. I'm Juliette Beauchamp. Today, we're switching up the TechFeed format a bit. I want to dive a little bit deeper into all of these startups going public, so stick around. So if you've been keeping up with TechFeed, you know I've been talking about startups going public quite a bit. And these startups have consistently been valued at over $1 billion. That makes them coveted unicorn startups, meaning they reach a $1 billion private valuation. Last week, two more unicorns went public, Pinterest and Zoom. Pinterest is the bulletin board-like social media site that allows users to search for info and then pin it for later. It boasts millions of monthly users. Shares began trading last week at $23.75, which was higher than the initial offering price of $19, and shares closed that day at $24.40. Zoom, which is a video conferencing software company that also went public last week, also closed its first day with share prices higher than when it opened. That's two pretty optimistic starts for those companies. Lyft was the first unicorn to go public this year and similarly had a high-performing first day of trading. But by its second day of trading, shares fell 12% and closed below IPO price. All of those companies are in varying stages of profitability. Zoom, for example, is profitable, while Lyft continues to be in the red. That's similar to Lyft's main competitor Uber, which is expected to go public next month. Like Lyft, Uber is essentially burning money, as it recruits drivers, cuts prices for customers, and invests in its various businesses. Uber also has to compete worldwide. Unlike Lyft, Uber operates internationally. Lyft is only available in the US and Canada, but Uber is expected to begin trading on the New York Stock Exchange next month. And it's aiming for a valuation of over $100 billion. If that number doesn't make you gasp even a little, it should. It would make Uber one of the highest valued companies to go public in about 5 years. Other tech companies that are also expected to go public this year include Slack, Postmates, and Airbnb. Those unicorn IPOs will unleash a wave of new millionaires in the Bay Area. So what do all of these tech IPOs mean? Well, for one, it's a pretty clear sign that tech companies dominate the markets. But you probably knew that by now. It also shows that profitability isn't an indicator of value. I mean, Uber loses billions a year and is gunning for a sky-high valuation. And like I've said, it means unleashing herds of new millionaires in Silicon Valley. People who got in early with these companies and will certainly reap the benefits. But for companies like Lyft, Uber, and Postmates, whose business models rely heavily on contractors and the gig economy, it also sheds light on who will miss out on massive success. The people who may not own stock at the company, yet are integral to its function. And the outcry of contractors is something to keep an eye on. Uber recently paid out $20 million in order to settle a lawsuit with some of its drivers. Thanks for watching today's episode of TechFeed. If you liked this video, be sure to give it a thumbs up and subscribe to our channel. And let me know your thoughts on these unicorn IPOs. Which ones are worth the investment? And tell us your thoughts about this different TechFeed format. See you next time.